for more than a decade. It was buy the dip, buy the dip, buy the dip. If you could find anything that was going up, yeah, you had to buy the dip. We're going to tell you why not only that stopped working last year, what we need to see going forward to make sure that we are back in the right environment to start buying the dip. There will come a time where we can buy the dips again. But here is, let's go to Investopedia quickly before we get into this, guys. I'll give you the breakdown of what this means. So buy the dips means purchasing an asset after it has dropped in price with the simple idea of improving your average price at a lower cost, therefore taking advantage of a dip in a strong stock. Let's break this down a little bit further, guys. What do we need to look for? What do we need to see going forward before we can start buying the dips again?
Well, you got to remember the first thing. Like, the whole idea about buying the dip is that it's a temporary pullback in the stock that's going to give you a better price, and then it's going to go back up. So what do you need for that to be true? You need there to be a trend to the upside. Generally speaking, we're not talking about necessarily catching falling knives. It's about getting that trend. Now, this was about the easiest strategy. I'm going to pull the SPY up for you just to give you the obvious point here. But we had the pandemic bottom in 2020. You couldn't have gone wrong buying dips. Like, look at every single pullback and what happens. Like, how many times are you actually making a lower low? Every single time you're looking at higher lows all the way up. I have the 50 period and the 200 period. Some people like to call this the golden cross when it makes that move, but look at it since it made the golden cross, holds higher low. Every single dip was just bought back up, but there's been a huge change, right? This has not been happening on the way back in, just going into 2022. It's been the exact opposite. If you were selling the rips and looking at the higher lows, you were just printing money. It's obviously different going short, but you were just printing money in the other direction. So the first thing you need to see is a low get established where you start making higher highs and higher lows. That's the basics. Now, fundamentally, you might be looking for things like the Fed pivot or inflation slowing back down, but that's really what you want. You're looking for a trend. The upside trend was broken. It has yet to be reestablished when you're looking at the overall market. So just understand that this is not about just YOLOing, getting on a bid on a falling stock. YOLO. It is supposed to be about buying dips in a trend. So first identify that you're in one at least.
All right, so look, 100%. I mean, we have this pretty funny graphic here. The trend is your friend, as a lot of people
a happy guy right
like to talk about that. This guy's pretty happy because if you followed the trend to the upside, then you'd be okay, but not in equity. I just want to show you one thing right here. We talked about when do you want to start to buy the dips and why maybe it hasn't been working over the last little while. Look how strong the US dollar was, right? This is the dollar index starting from 2021, so all of last year. You're going to see right here just some nice moves to the upside, and it just kept going all year. So there used to be sort of an Argentina. There is no alternative, right? So when that happens, yeah, you could put your money back into stocks. Anytime a stock dipped, you could go back in there and buy it. Why? Because there's no alternative. Interest rates were yielding 1%, 2%. So like even that was high. If you can get that, that was great. But there really wasn't any advantageous opportunities other than in equities. Well, when you have the US dollar ripping up like this, and rates continuing to increase of where now even the Fed's looking at 5%, you do get a little slowdown now as some dovish talk has come through, but the more hawkish they get, the more this number is going to keep going to the upside, thus giving us real no dip buy alternatives. And that's where I just go to this. You showed the chart before. When there is no trend, then you ignore it. But this year, it was actually the other way. Many equities were pointing the other way to the downside. So you got to wait until the trend is broken before you actually step in and start to buy some of these equities.
All right, curveball. I want to throw out a monthly chart here of the overall market. Here's the S&P 500 on a monthly time frame. I don't know about you guys, but that looks like a pretty good trend to me, still to the upside. Understand what your time frame is, understand what your risk tolerance is, and understand what levels could come into play. Overall, if you go back far enough, this is a pretty good looking trend. You have to be patient on dip buys. Define where your levels are, understand what your strategy is, do your back testing. That is a look at when, guys, we can start once again buying the dips.